Scentre Group cancels their distribution. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Once again, I've got my stein of coffee in hand, and I thought we'd have a look at an article from real estate or commercialrealestate.com.au regarding the Scentre Group cancelling their distribution. Now, this really should come as no surprise to a lot of people, because for a while I've been discussing the implications of the economic lockdown and pretty much the retail recession that's been going on since, beginning of the year on these large real estate or commercial real estate investment trusts or portfolio companies. And I thought we'd have a look at this one about Scentre Group because they're a pretty big one. Now, before we go through this article, let's just jump to their website to get a bit of an overview of the group. Now, this is from their own website, the preeminent shopping centre portfolio in Australia and New Zealand. So one of the advantages people, I'm learning, invest in real estate investment trusts or groups like this or on the stock exchange because their shares taking a bit of a hit is because of their nice, juicy and regular dividends. Their business model has been pretty solid for a while. They get guaranteed increases in revenue by jacking up everyone's rent every year. Let me know if you've ever had a commercial place. And, just provide a nice shopping centre, pretty much. And then force all the tenants to refurbish every couple of years, because it needs to look pretty. But we'll see. There have been several changes to consumer behaviour because of this lockdown. And a lot of the smaller businesses have been going under since the beginning of the year. We can see here they've got 42 centres, greater than 12,000 retail outlets, over 548 million visits, and $56 billion in assets under management. And here we go. They've got 17.8 with JV partners, 56 assets under management, as I said. The GLA, global lettable area, is 3.8 million. And Scentre Group shares of AUM are at 68%. So let's have a look at their stock price. So the beginning of the year in January, they were at $3.83. Looks like they bottomed out at $1.43, and now they're at $2.28. $2.28. People want those nice, juicy distributions. I don't blame them. So let's have a look at this, guys. So Scentre cancels distribution as mall customers or shopping centre customers, for those of us in the Southern Hemisphere, evaporate. Westfield mall manager Scentre Group expects most retailers in its shopping centres to reopen over the next few weeks, but uncertainty around the pandemic has prompted it to cancel its first half distribution payout. Shoppers were out in force over the Mother's Day weekend, and Scentre, along with other large retail landlords, will be buoyed by the slow lifting of restrictions across the country this week. However, some of the lockdown's economic damage can't be undone. Despite the group's 42 Westfield malls staying open throughout the crisis, Scentre sales in March took a major hit as lockdown shoppers abandoned big centres. I completely abandoned. I haven't gone to, not that I go to Westfield too often. I try to avoid it, to be honest, just because the parking is such a pain. But I haven't visited one during this lockdown. Though I'm probably not the demo, everyone. I'm probably not the demographic. So specialty sales. Discretionary items such as clothing, jewelry, or cosmetics plunged almost 26% over the month after customer visits to the group's malls fell off a cliff, down around 40%. Specialty sales for the quarter, rather than March, fell 7.2%. So you've got to feel sorry for these people. Because, there's some talk of clothing shops reopening. It's going to be tough, guys. It is going to be tough. In response, the country's largest shopping centre landlord has cut board fees and its leadership team's pay by 20% until June this year, while also slashing its design and construction workforce by 60% after it put on hold developments in New South Wales' Mount Druitt Mall and reconsiders all active and pending developments. Now, that's going to be tough. 60% of their DNC workforce. That's going to be tough for those people in that industry, particularly the construction sector as it's going at the moment. To me, that's more concerning than the halt on the distribution. I guess just because this is closer to home for me, guys. This is closer to home for me. The one bright spot in Scentre's figures released on Monday was supermarket sales, which jumped 9% for the quarter and 20% in March. Well, that's not surprising. People were hoarding and buying things. I mean, just over half of all retailers, 57%, in its malls across the country are now open. But those that are trading take up more than 2/3 of all leasable space, Scentre said. Given the uncertainty regarding the pandemic, its duration, the economic impact, and the timing of operating cash flows for the group has determined to not pay an interim distribution for the half period ending 30th of June 2020, it said. Across the country, multiple retailers are either reopening stores or revealing plans to reboot their businesses as the lockdown restrictions lift, but the pandemic's ill effects will be felt for some time yet. And remember, we were looking at other businesses like Foot Locker, where they were looking at shutting particular stores and shifting or increasing their online presence. And they were in a good situation. They already had online capacity, where there were other businesses that didn't even have anything. Which seems odd now. We're past the year 2000. It seems strange, doesn't it? Michael Vincent, an analyst at investment bank Jefferies, said Scentre's decision to cancel its distribution was consistent with its modelling and assumptions, but the move prompted Jefferies to downgrade the stock. The result is okay, but the March numbers are missing all the retailers who were shut, Mr. Vincent said. Scentre has a weak balance sheet, and a 20% decline in asset values for June will see gearing rise from 33% to 41%. Rents need to adjust down, and gearing is too high, he said. Scentre had previously suspended its guidance for the year. Macquarie analysts agreed the company's update was soft, but maintained a neutral outlook on the stock, as it was largely in line with other retail peers to date. Scentre's shares had taken a battering this year. At last Friday's close, they were trading at 50.6% down to the group's last stated book value of $4.35. Well, there you go. There you go. That's what the market is telling us, the value of this retail sector. I wonder what the market's priced in, everyone. I wonder what behavioral changes they expect. In early afternoon trade on Monday, they were up 3.18% to $2.27. And as I look over to my screen, on the they're at $2.28, so they barely shifted. So let's jump and we can have a look at their announcement here. And this is from the ASX website. I'm just making sure you can see it all on the screen. So we'll have a look. Operational update. Operating performance in January and February 2020 was strong. Our business context and operating environment shifted in March 2020 as a result of the pandemic. The group worked rapidly to adapt its operations to the unfolding situation in Australia and New Zealand, including additional health measures and government restrictions. Scentre Group CEO Peter Allen said all Westfield living centres have remained open throughout the pandemic. Living centres? I guess they need to rebrand, and I know they want to create an experience, and it's not just about shopping. You want to all that airy fairy stuff. I'm an architect. I know I need to believe all that stuff, but I'm too cynical. It's just shopping and siphoning money out of people's credit cards. Maybe I've worked on too many retail fit-outs. I've had enough of them, I think. I've seen all the BS, guys. I'm proud of the group's focus on the health and well-being of our customers, retail partners and employees, whilst maintaining business continuity and economic activity to the extent we possibly can. Balancing these priorities remains our objective. The group continues to follow the advice of health authorities and has put in place a range of precautions across all our centres, applying the highest standards of cleanliness and hygiene. These day-to-day operational procedures will be ongoing, given physical distancing is expected to be part of our lives for some time. The community can have confidence to shop at our centres, and we ask customers to maintain their good hygiene and physical distancing practices when they visit our centres and our retailers. We're committed to supporting the reopening of the economy as more of our retailers continue to reopen their store network and engage with customers. In Australia, 57% of retailers represent 70% of gross lettable area are open, with more retailers scheduled to reopen over the coming weeks. Based on the latest guidance from the National Cabinet, we would anticipate the majority of the remaining stores will reopen soon. But will customers be there? Are you planning to go shopping, guys? Are you planning to head to your local Westfield or your local Scentre Group once it's all reopened? You're looking forward to it? Or have you realized how much money you were wasting on things? Or considering the audience demographics of my channel is about 90% male, and none of us the group in the demo. So maybe, should I be sexist and ask the girls? I don't even know if Rachel would be keen to go to this. So we'll scroll down here to just their earnings and distribution. As was previously announced, considering the impact of the pandemic and the volatility in markets globally, the group suspended its outlook guidance for 2020. Given the uncertainty regarding the pandemic, its duration, the economic impact, and the timing of operating cash flows for the group has determined to not pay an interim distribution for the half period ending 30th of June 2020. The group believes that retaining this capital will further strengthen its financial position and ability to continue to deliver long-term returns to its security holders. So there you go. Does that fill you with confidence, everyone? Does that fill you with confidence? So we'll have to see, guys. We'll have to see how it goes. And I will link to this announcement on the reference page of my blog, which you can always find in the pinned comments below if you want to go through it in greater detail. Thanks for watching, guys. As always, let me know your thoughts and opinions. Do you think this is just the beginning of many and how it will affect this retail sector? We're going to see more write-downs of their portfolio. Definitely one to watch. I suspect, if we don't have this V-shaped recovery that everyone is hoping for, this may be one of many. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can also buy our merch from HeiseSays, send us gold using Gold Pass from the Perth Mint, and support us via PayPal. Thanks, guys. I'll see you next time.